What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about gold and silver as we have noticed a recent pullback in the markets. Gold is yet again below 2,000 an ounce, and I want to talk to you guys my opinion as to why I think that that's happening and the factors to look out for and the things to watch as to what's going to move the price of gold and silver in the weeks and the months to come, because I think that there's a few key things. We will talk about that in this video, along with the gold and silver ratio, just as we've kind of seen silver outperforming gold, but I also think there's a reason behind that as well. So stay tuned to the end of this video. I did a little bit more preparation as to, the materials and the statistics and the facts that I put together in this one. So hope you enjoyed this video, guys. The last thing I want to say is we do have an exciting flow of new and exciting companies on the way. We just did an interview with Aftermath Silver. We're going to be doing another interview with Silver Elephant, so trying to get those new silver companies. We should have an interview with Theta Gold on the way, so it's going to be an exciting time, especially next week for Departures Capital. So without further ado, bring you guys the market minute. Let's get straight into it. And the last thing before we start this video is if you do support me, the channel, and all the videos, I kindly ask for you guys to explode that like button, along with if you are a new viewer, you haven't had a chance to subscribe yet, but you appreciate constant daily updates in the markets, a steady flow of new and exciting companies, and you want to stay up to date, maybe specifically on gold and silver, then don't forget to cash that subscribe button and ring the market bell for notifications. And let's get straight into this video. And we got to give another quick shout out to Doc, just as he's been doing such a great job editing these videos and making them a little bit more fun. I got to say, comment of the day yesterday was pretty funny. So Jigga Twist, first comment of the day. Keep up the awesome work, Aaron and Doc. Your fan, Matt. Nice to hear it. Quick shout out to Doc. Next comment of the day goes to Kyle M. Christian done got triggered, yo. And that was just a really funny comment. I mean, I'll try and talk about all the comments of the day, good or bad, as long as they're not too explicit. Next comment today goes to Michael. Renewable energy and other dividend stocks would be a great video. Thanks for all the work you put into these videos. All my homies hate Christian. So I'm glad that we've got some support here. Next comment of the day goes to Ed. Buffett is my contrarian signal. Chasers bought with him on top of the B wave. Will see blood. Healthy for the long-term run. So good to know. I got to agree with that. Buffett is definitely the contrarian signal, and I think that, yeah, like I said, it's great for the long term, but we will see short-term volatility. Last but not least, James Dillon, comment of the day. Good idea to reflect on the millennial folks and how they invest, especially their use or abuse of Robinhood. Keep up the great work, and thanks, the big kahuna. Okay, we got to do one more comment, guys. I'm sorry, Masonic Kid. Want to say keep up the good work, digging the new camera. Ask Doc if he's been back to the future, because I want to know what's going on with these mining stocks. So that's it for comment of the day, guys. I'd love to do just one straight episode of pure comments, but we got to get to the content. What can I say? Let's see what's going on Wall Street. And it is a green day. The NASDAQ is in the green, up about 0.5%. And I really feel like, this is more and more becoming a tech. And well, obviously the NASDAQ's a tech index, but it's because of Tesla and a few other select few companies. The moves in Tesla are just crazy. I just want to simply pull up the charts real quick for Tesla just to take a look. It's up another 6%, $19.91 per share. What did we hit on the day in terms of the 52-week range? We did in fact hit exactly $2,000 per share. So what a wild day for Tesla. I don't know what to say, guys. I mean, I remember saying, oh, Tesla at $1,000, it's overvalued. I definitely underestimated what the millennials can do and the amount of money that is out there, just as I've seen so many bubbles. But what can I say? Who knows how high it could go, especially during these times. So if you've been long Tesla from the 2,300s, which I did take a very close look at Tesla during those levels, congratulations if you've stuck with the company. It's been a tremendous run, but how big's a bubble? A bubble's as big as it can go until it bursts, and who knows when it will burst. So that's my only comment on that, and I'm looking forward to hearing other YouTube influencers' opinions on this bubble, specifically Daniel Pronk. So we'll see what happens. Next thing we're talking about is gold. Gold is down $22 per ounce, or $1. Gold is down $21 per ounce, or down 1.11%. It's kind of looking like gold is making this head and shoulders pattern now, consistently making lower highs. Now we'll see if we get lower lows. That I think, if we're trying to get all technical right now in terms of charts for gold, that's something that I would look out for. If we manage to break through this 1884 level that we saw on the first pullback. Now gold's looking pretty strong around 1950. If we do get another wave of selling, I would really watch for right in around 1875, I guess you could say. If we break below that, obviously, I think that a break below 1875 would leave gold vulnerable to the downside, potentially to 1800. And I've said for a while, I don't necessarily like these fast moves up in gold. It's going to happen. We're going to get things like that, and we're going to get even more aggressive moves for silver. But I'm okay with gold being anywhere from 1800 to 2000 for the foreseeable future. At those levels, as long as the miner has some kind of decent grade, they're still going to make money. A lot of these miners were, positioned for $1,300, $1,400 gold. So we're at 1800, we're at 1900, we're at 1800. In the grand scheme of things, as long as they're still making money, that's important. Obviously, as traders, we want to see gold just continue to skyrocket, especially if we're long mining stocks. But I don't think that this is just an overnight thing. Everything happens so fast nowadays with millennials just pumping money in. And I want to see, I want to see a 50% gain in 3 days. I want to see this and that. But that's kind of my philosophy right now. So whatever gold does, I'm obviously long-term bullish still on gold, but I don't expect this to be just, a straight shoot to the moon. Although we will get moves to the upside. All right, guys, so let's take a look at silver. And silver, actually has been outperforming gold. Let's compare the two metals. I think that that's something that we should do right now. So let's take a look and see how is silver performing compared to gold. And, as of recently, we can see here gold's in purple. Silver has in fact been outperforming gold, especially over the last month. So we can see gold is up 5%, silver is up 19.4%. So silver, once again, consistently trying to play catch up. And I want to just talk about the gold and silver ratio, just as the gold and silver ratio remains in the low 70s. Currently, it's around 71.8. And as we can see, it's dropped dramatically. So I think that that trend should continue. I think silver is in a very interesting spot right now. The fact that silver gets industrial demand, supply issues, there's going to be way more demand for this metal, electric vehicles, renewable energy, all of the technologies of the future. And then silver is also getting that safe haven support. There's a lot to like about silver. I think that silver has more potential than gold. But I think that gold, is a little bit safer, a little bit less volatile. But if you really want to get into the precious metal space and you really want that leverage, then I think that silver is probably the way to go. Once again, not financial advice, just my own simple opinion. So I want to talk about a few opinions from Kitco now. I want to first talk about this sell-off that we saw on Wednesday. So Kitco obviously putting out a lot of awesome articles, a lot of awesome interviews regarding the sharp sell-off on Wednesday. So this is Peter Hug. We're talking about Peter Hug. Hug lays the blame on lots of long positions that needed lightning ahead of the Fed announcement. We're just simply going to read this one quote that he said. They were just making sure that if the Fed said something different, they would be able to take some money off the table. And I think that caused the selling today. The move this week has been due to the Fed announcement. And let's see what Commerce Bank has to say. So at least half of the downturn in gold was attributable to the evening publication of the minutes of the FOMC meeting on the 29th of July. They contain no indication of any imminent yield curve control. This is likely to have promoted some market participants who have been betting on this happening to square their positions. So just repositioning in the market, I guess you could say. Now I wanted to talk about one unique chart, and this, was something that I was thinking about. Okay, let's talk about inflation, guys. What's going on with inflation versus what's going on with gold price? Usually gold works in a time of inflation when the currency is losing its value, prices are going up, and gold's a good store of value. But what we're seeing right now is inflation is in the blue, gold is in the yellow, obviously, and we've seen inflation drop dramatically, meanwhile gold going up. So what's going to happen now? What if inflation starts to pick up like crazy? We've seen this decoupling over the last little while, but if inflation starts to tick up, which I personally think that inflation is going to tick up, because we're getting all this fiscal and monetary stimulus. There's so much money in the market. The currency, the value of the currencies, especially fiat currencies, are going down. So I think that things are going to get more expensive. I think they're already starting to get more expensive. Go to the restaurant, we're seeing prices go up. We're seeing tips be included into the bill. That's just, is gold now going to play catch up, especially if inflation starts to rise? I think that that's going to happen. This was one interesting chart that I wanted to show you guys and just simply talk about, because we've seen this correlation in history. Inflation goes down, gold goes down, inflation goes up, gold goes up. We've seen that happen quite a lot in, early 2000s. Once again, in 2008, we saw that happen. And I think history will repeat itself. The last thing I wanted to talk about was the US dollar, and this is one thing that I've been watching very closely, and I've always stressed for you guys to watch the US dollar, the DXY specifically. When the DXY drops, gold tends to go up in value because gold is denominated in US dollars. And then, when the US dollar drops in value, essentially you can buy less gold for that same US dollar, and the price goes up. So MKS PAMP groups, the US dollar to gold correlation will be one of the primary drivers for the precious metal in the short term, according to MKS PAMP group. The correlation between the US dollar and gold remains intact to dictate price action over the near term, with the DXY index holding towards 93. So we talked about the US dollar, especially the US dollar index, and I'm going to pull up the chart for you guys real quick, just as there's definitely some key levels to watch. And 90, you could say 93, I kind of pegged it as 92, 93, but 92, 93 looks like a level of support. Now, if we don't hold on to this level, which we saw the US dollar drop quite substantially, I don't think the US dollar is going to be very strong. I think the US dollar will fall anywhere to, 90 to 89. If that happens, I do think we will see continued support for gold. And the last chart I wanted to pull up before we dive into all of the charts and the recap, the biggest gainers, the biggest losers, is this correlation between the US dollar and gold. And as we saw, guys, it got a bit rocky back there in March when we saw that whole market crash, if you want to call it that. The US dollar spiked, but we saw the US dollar and gold spike at the same time, and then gold absolutely took off when the US dollar started to tank. Now, I don't think that this is going to be, just a short-term thing with the US dollar. I think the US dollar is permanently going to lose quite a bit of ground due to all this fiscal, monetary stimulus, all this debt, everything that's going on in the markets, uncertainty around, the US dollar as the world currency, but we're not going to get into that debate. Long term, I think that this is positive for gold, and if the dollar keeps dropping, long story short, I think gold will keep on going up. So keep your eyes on the dollar, keep your eyes on those key levels. 92, 93, I think that that's an area to watch in the DXY, and I'm hoping that the dollar in fact drops to 89 or 90. So some levels to watch, just my opinion. Let me know what you guys think, and let's dive into the charts now, and that's it for the video. So in terms of the MJ stocks, one comment I did want to make in terms of the MJ stocks was the fact that ACB has continued to drop, and now we're down to around 12 bucks. So biggest losers, Ignite, Koyos, and Harvest One. Where is ACB? ACB is down 2.92% to 12.65. So essentially back down to $1 per share Canadian. And man, am I happy that I sold, that position at 25, because it's effectively down 50% now. FSD Pharma up 10.9%, biggest gainer. Now let's take a look at the gold and silver stocks, and it's a mixed day. Like I said, it's not too bad of a day. First Mining, Sandstorm, and Barrick, three biggest gainers. Lundin, Tourmaline Metals, and Fosterville in the red. I do plan to do a little bit more buying over the next little while, so we'll keep you guys updated. We'll keep the private group updated as to the stocks that I'm buying. We always tell the private group first, so if you're looking to, see which stocks I own, which stocks I buy and sell, and everything else that comes along with it, check out our full access insider group. Just $10 a month or $100 per year. Now, let's get into the dividend stocks. Biggest movers, Brookfield Renewable Energy Partners up 2.4%, and that stock has just recovered like crazy ever since that plunge. So, gotta say, guys, very, very happy to see that. Biggest loser, XLU Utility Select Sector SPDR down just about 1%, so still a pretty decent day. Now let's get into the tech stocks and take a look at Tesla, of course, hitting fresh 52-week highs along with Apple. Holy smokes, how much room does this tech rally have to run? I don't know, guys, but every day I check, I'm just like mind boggled. Else Nutrition, biggest gainer on the day. This stock has held up very well, $2.40, followed by Tesla, and biggest loser is Tilray. So that's it for the video. Hope you enjoyed it, guys. Thank you so much for watching, and always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.